Warren Buffett, one of the greatest investors of our time, has a great saying. And it's a great saying because it's a really prudent saying. And it is, there's two rules to investing. Rule number one is don't lose money. Rule number two is don't forget about rule number one. And so in this video, I'm going to talk about how the wealthy investors I work with and other wealthy investors, in fact, most wealthy investors, play defense before they play offense. They concentrate on not losing money. And that's what we're going to be talking about in this video. Most wealthy people become wealthy by taking chances, by playing offense. But also, most wealthy people know that if they don't hold on to their money, if they don't protect it, if they don't watch the downside, they're going to lose their money because there's always risks. And so most wealthy people on the way up start to put in systems and strategies for not losing money, right? But they're also making money. So what most people do is they try to take the risk off the table pretty early, or as much risk as they can off the table. And they do it with insurance, they do it with corporations, there's lots of different strategies that most people aren't really aware of because they don't need them. But as you become more wealthy, you're going to need strategies. You're going to need to play defense. And that's a really important part of the whole investing portfolio. You got to play offense and defense. And sometimes if you're a football fan, they say, defense wins championships. And that's true. If the other team keeps scoring points on you and you're not scoring as many as they are because your offense may be just a little bit less than theirs and your defense is not as good, well, they're going to win. So you've got to build your defense primarily. And I believe in that. And I believe in the stock market, you have to do the same thing. And that's where I've made my wealth. And that's where I help other people make their wealth. And that's where we play a lot of offense. But we also do it by playing defense. So, for example, we do stocks and stock options. And when we buy a stock, we might sell an option to some gambler out there, let them take the risk. And we'll use the proceeds that the gambler gives us to help make our return. That lessens our risk, and it also increases our return. The gambler can go out there and swing for the fences and try to make 10 to 1 on his money all they want. But over time, that doesn't work. And so we know that over time, we don't have to swing for the fences. We got to just get on base. And the more we get on base, the higher our batting average is. And the higher our batting average is, the more chance we have of getting in the Hall of Fame. Get off on all these sports analogies. But at the end of the day, you want to protect your capital. Give you an idea. We have a program where we tell people and we target 1% a week. Now, it doesn't always happen. And sometimes it happens 4% a week, right? But we shoot for 1 to 2% a week, let's say. Now, if you have a few weeks in a row that go backwards, there's a lot of weeks when you put the compounding effect in there that you have to make up for that. And if you don't make up for that, you're actually set back quite a bit. If you can consistently make 1 to 2% a week, week after week after week, well, think about it. That's 50% a year on 1% a week. If you could just make 2% a month, in one of our other programs, we talk about 2% a month. 2% a month is pretty common for us to make in a month. That's 24% a year. I don't know a lot of people that are making 24% a year. And if you're in real estate, you got maybe some cash on cash investments that are making 15 to 20, 25% a year. You get the fan appreciation. There's lots of cool things that happen with real estate. But by and large, most people lend out money in real estate on second mortgages and may get 12%. And the bottom line is you've got to make sure that you're protecting your downside. So what happens if somebody doesn't pay on that mortgage that you lent them at 12%? Well, now you've got to go foreclose. And that might take 6 months. You got to pay attorneys. You may not get the kind of return that you thought. The house may be destroyed by the time you get it back. If you end up getting it back, if you were smart enough to put yourself in a top position on the mortgage. So there's risks in everything. So the question you have to ask yourself is, how do you defend against those risks? Because the more you defend against those risks, the better chance you have of hanging on to your money and letting that money work for you. That's really the critical component, is when those opportunities come, you've protected that capital, because that capital preservation protection is key. And if you protect it, that means that when an opportunity comes along, you can go right in for that opportunity. That's what the wealthy people do. So here's what most people do, right? They buy a stock because somebody told them to buy it, whether it's a broker or a TV station or a newspaper or magazine or a buddy, that drives an Uber. And they tell them, hey, this is the stock that you should buy, Tesla, for example. And Tesla's a fine company. And I own some, by the way. And so they buy it. They don't know much about the company. They know they make these really cool cars. They don't know anything about the numbers. They've given up their power. They've never taken their time to learn about investing. And so, they buy that. And then it goes down, right? Because invariably by the time you hear about it, it's too late. And so you buy this stock and you don't have a strategy for what happens when things go down. You don't have a strategy for taking your risk off the table. So the stock goes down. What do? Well, most people do one of two things. They either buy more. They average down. They say, well, I liked it at 500. I'm going to love it at 400, And so they buy more. They think it's on sale, right? A lot of times that's the biggest mistake you can make because then it goes to 300. You don't have the capital to keep averaging down. Eventually, the stock stays at 200 for the next 10 years and your capital is locked up. And that's what happens in the second set of people. They lock up their capital. And then when an opportunity comes along, they don't have the capital to be able to take advantage of it because they've locked it up and they said, oh, it'll come back. It's a good company. They make great cars or whatever the story is. They justify in their mind why, they didn't have a rule for taking the risk off the table. And that happens so often when we're untrained. Look, in life, there's two kinds of people. There's people that are trained in something and people that are untrained in something. And there's no shame in being untrained in something unless you want to get a result. And if you want to get a result in that area, get the training. Simple, right? You want to be a great golfer? Like that's your thing? You're not born with a golf club in your hand. You got to go figure it out, right? You got to get some coaching, some mentorship, whatever it is, and then you can become a great golfer. But you've got to get some training. And in money, unfortunately, there's really very, very few people that have training. They don't train us in our high schools where they should, train us in money management, budgeting. They don't train us in college, how to negotiate things, how to manage our money, how to invest, how to buy and sell real estate, how to buy and sell stocks and options, things that you should know, how to buy your own house. Don't get me started on all these things, but they don't teach us about money. So what do? Money's just this thing, right? We got a bunch of extra money. Hey, I'll throw it at Bitcoin. Seems like everybody else is making a bunch of money on that, but you got no strategy behind it. Hey, Kramer said Tesla's great, so I'm going to buy some Tesla, right? Or the CNBC guys on Friday said, it's awesome. You got to buy some Tesla. And you don't have any reason for buying other than you saw a car drive by you the other day or somebody told you about it. And there's no strategy for taking your risk off the table. All right, I'm beating the dead horse, but I want you to understand that the wealthy people have a strategy. They say, like I tell people that are investing in my Breakout Vivid Dream system, if you buy a stock at a proper point, the highest probability spot on the chart, there's a spot where you want to take your money off the table, not only on the downside, but on the upside, right? So we might shoot for, say, 20, 25%. But if the stock goes down 7%, we're out. Like, it's an unemotional decision. Because if you start to get emotions involved, it starts to work against you. Emotions go up, intelligence goes down, and vice versa. And so we want to take those emotions out of there. So we have to set up rules to make sure that we follow systems. And so in my programs, I have a program called the Cash Flow Machine. I have another program called the Wealth Investors Club, where what we do is we teach people how to make 1% to 2% a week or 2% to 4% a month, right? And what we do is we primarily focus, the first thing we focus on is downside protection. We happen to use the system that we've built for downside protection and creating income at the same time, but it's really primarily focused on protecting your downside, right? If you lose all your money, you can't live to fight again. But if you can preserve your capital, that opportunity comes by because you've played defense, because you have capital preservation as a big part of your strategy, you're able to take advantage of those opportunities. And that's what wealthy people do. Don't lose money is rule number one. Rule number two, don't forget about rule number one.
How can we help you? 5 ways. First, subscribe to our channel and click the notification bell below to make sure you get our new video the minute it comes out. Second, get a copy of my book, Hacking Money, and you'll learn a system for creating wealth through passive income so that you can build the lifestyle of your dreams. Click where it says book below. Third, if you want to hit the ground running, or if you want to learn how to invest from someone with over 44 years of investing success, click the products and programs link below. Fourth, If you want to accelerate your path to increase your wealth, consider joining one of my ecosystems. I have mentorships and mastermind programs for learning that are practically guaranteed to make you a successful investor. Or if you want to travel the world and learn from me and other multimillionaires on the path to greatness, you should consider joining my elite mastermind group. Fifth, if you want some help right now because you have a burning issue, you need something solved, you want to create massive passive income, or you want to accelerate your results in your investments, or maybe you just want personalized mentorship to build the lifestyle of your dreams, we can help. Maybe you're a multimillionaire who just wants someone else to handle some of your investing decisions and you want to invest in one of my funds. Whatever it is for you, click on the link below where it says become a client. All those links are below. You create your world, nobody else. And remember, never give up your power in your health, your wealth, or your time.